Hi, everybody. This is Matt Fick from Financial Life Planners, and this is your stock market update for the week of October 7th, 2025. As I'm sure you're aware, there's been a lot going on in the world recently, specifically with the United States government. So I thought today we would talk about what's going on and how that impacts the stock market. Recently, as I'm sure many of you are aware, uh, the government shut down due to disagreements on a government funding bill on October 1st. And since then, the government has been closed. Also, I think it's important to note for those of you who are receiving Social Security, I've had this question come up a couple times in reviews. You will be expecting to receive Social Security payments on time like normal. But during this government shutdown, what has happened? Uh, Gina mentioned uncertainty and unrest, and part of that has shown itself in gold hitting an all-time high. Gold historically has been a little bit of a flight to safety as it kind of deviates itself from the market. So let me show you a chart on gold really quick. And this is the gold ETF, Gold Shares Bullion ETF. And here you can see a pretty big pop uh, up this week in gold. A lot of people are uncertain about the market, but let's take a look at how the market is doing as a whole. And we'll do that by looking at the S&P 500 as a whole. So here you could see since that October 1st government shutdown, the market has been trending up a little bit with a little pullback today. So it's been business as usual for the stock market. It's also important to note that since the 17th, when the Fed had the rate cut, the market has been performing well since then, like what it has traditionally done when a quarter point cut happens, up about 1.5% since that cut on September 17th. Speaking of rate cuts, the Fed will have another meeting at the end of October to discuss the future of the interest rates in the United States. Uh, Recently, we had some data coming out from inflation in August, and inflation was about normal, where they expected it to be, which has led to there to be a high expectation of a cut at the end of the month. I will show you the CME group, which demonstrates the odds on that. And showing here for that October 29th meeting, a 94.6% likelihood of a quarter point cut again at the end of the month. These rate cuts are good for people who are borrowing, like if you need a mortgage or any personal loans, but do negatively impact us in regards to interest rates for CDs or treasuries or other fixed income. The Fed judges if they're going to make a rate cut based off of the inflation numbers, which are a little high, but like I said, in line with what they expected from from the previous month, as well as job numbers, which have been low, which kind of fueled this cut this past cut in September. Um, so keeping an eye out for jobs data and inflation data in September towards the end of this month. Another indicator of how the market will be doing will be earnings and how companies have been performing the past quarter. We'll start to see those earnings come out next week, starting with the financial sector companies and the banks like JP Morgan Chase, Goldman Sachs, Visa, companies like that. All of this to be said, even with all the uncertainty going on with the government and everything going on in the world right now, the market has risen above the noise and been able to continue to chuck along the way we were expecting it. So right now, the outlook is cautiously optimistic for the future. That's all I have for you today. As always, feel free to reach out if you need anything from us, and we will talk to you next week. All right, bye bye.